MMT, I have a 60-minute chart on the VIX and the S&P 500 60-minute chart. And we had a big gap up yesterday on a 60-minute chart, and this where the fear is. And we broke out higher, and we broke down the other day here in the S&P. We're making bottoms here, and we got a reversal here. The thing that I want the MMTs to learn is that when we peaked in the fear indicator up here toward 48, we came down. We've come back up here. When we were rallying off the bottom a week ago, not this week's trading, last week, when we broke out, the VIX broke down and it was elevated down here at the support level. It's gapped back up here to 45. The key is that the S&P 500, you can clearly see from its breakout here, is coming back down and getting close to testing where the breakout happened here. The lows on the S&P were over here at 1100. Okay? What happens in markets is this bottom builds as we reverse. This could be a gap up to test it. There is a reversal in the fear. It's very short. And here, as we were moving up, we were reversing here. What we're going to be looking at forward is that how does this top here, this gap up, it comes back all the way down, and how this new bottom in the S&P, after we're out of options expiration, today's date's 8/19, is we'll be watching after today's options expiration, is that how to buy the calls moving forward or the puts moving forward on the S&P using this base here versus this top reversal here, and how we can trade either put options that will break these lows over here below us here. If that's the case, this would break higher. If we consolidate at a higher fear level of 41, that makes this bottom vulnerable, makes it weak. It's looking good so far. It's looking good so far. However, when we get out of today's expiration, we want to see that this is a top reversal down, and that this sell-off from this original burn over here at the market lows on a 60-minute a week ago, not this week, but a week ago Thursday, then Friday, then Monday's follow-through. This is the reversal of that first initial low. We're right here. This is going to be the make or break for the rest of the calendar month in the S&P 500 as to how to trade calls and puts within the actual volatility. Okay? The calls are oversold and the puts are high value. When markets make a retest of this low here versus the low over here, is that this is higher in price than this original one. So we still have some expansion here, and this high here in the fear indicator is lower than this peak where it had gapped down and then came back up and then went straight down. So when we had the big rally in here and we went straight down in the fear indicator, now we've gapped back up and we've come back down toward the lows here. So trade management long and short is going to be dependent on elevation in fear or de-escalating fear, meaning that fear levels start to come off, and you'll see the accumulation here before breakouts and breakdowns for the rest of the calendar month of August and the calendar month of September. Fear, VIX, S&P 500, both 60-minute charts, we can clearly see the breakout and how the fear came off and how the breakout went up. There was less volatility in the markets when it happened. Volatility has returned with a peak of fear and a sell-off in the S&P. Trade management moving forward outside of the monthly options expiration will be discussed on Saturday's training session.